Welcome to day 4 of the 30-day bootcamp. Today we're going to be learning about 4 of the most important events that happen in the stock market. But most importantly, we will be discussing the mandatory need for an economic calendar. The economic calendar is absolutely imperative to your trading career. You simply must not start your trading day without knowing what economic news will come out. In fact, the economic calendar should be the first place you start in the morning, before you even open your trading platform. This is required for any Bang Bang trading student, employee, or any of our full-time traders. You see, starting your day without knowing exactly what economic news is coming out, and what time it's coming out, can be detrimental to your trading career. The economic calendar is the most important tool that any trader will ever have. It will enable you to be prepared, when to be cautious, and when to determine your trading size appropriately. At the end of the video we will discuss the importance of the economic calendar as well as quad witching, earnings and major world news.
Hello everyone. Again, I'd personally like to welcome you to Bang Bang Trading. My name is Lena, and I'm going to be discussing Quadruple Witching Day, along with the economic calendar, earnings, and major world events. All these events are imperative to your trading career, and will have a major impact on your trading, if you do not understand the impact they have on the markets, or when they occur. The importance of these events are imperative to your trading success. You must know when quadruple witching occurs, earnings begin, and what economic data is on deck every single day of the week. Let's start off with quadruple witching. This event occurs once every quarter, on the third Friday of March, June, September, and December. Quadruple witching or quad witching is the perfect storm of events. On quad witching days, we see the expiration of 4 different types of derivatives contracts: stock index futures, index options, stock options, and single stock futures. These trading days typically see much higher volume, and the markets can potentially rip in either direction exponentially in a matter of minutes or seconds. So knowing what day these events happen on is imperative to your trading career. You could potentially lose your entire account in one single trading day, if you are a new trader, a gambling trader, or an uninformed trader. So mark these days down on a calendar, or in a journal, somewhere close at hand. Better yet, tape them to your monitor if needed. Again, they occur once every quarter, on the third Friday of March, June, September, and December. Next up is earnings. Earnings season typically begins 1 or 2 weeks after the last month of each quarter. So be on the lookout for most public companies to release their earnings in early to mid-January, April, July and October. You want to keep an eye out for the major players like Tesla, Amazon, Google, Nvidia, Meta and so on. These companies have the potential to move the marks individually or collectively as a whole. In the futures markets, we don't have to worry about each individual sector like you do in the equities market, where the bad earnings of one company can have an effect on other companies in the same sector. Remember, the futures markets are comprised of a basket of stocks in the equities market, so the impact will be collectively as a whole. Major companies will have the ability to move the markets, so find an earnings calendar and have it posted for reference during earnings season. A great resource that we use is from Earnings Whisper. You can find them on the web and also on Twitter. They have a great earnings calendar. Is it just me, or is it getting stuffy in here? Why don't we go outside? Wow, this is so much better out here. Feels good, right? Well, anyway, let's get right into it. The economic calendar is one of the most important tools you will use. And you never want to start your trading day without it. I'll repeat myself. You never want to start your trading day without looking at the economic calendar for the upcoming news events. Especially events like interest rates, CPI data, which stands for the Consumer Price Index, and the PPI, which stands for the Producer Price Index. The PPI is a family of indexes that measures the average change over time in selling prices received by domestic producers of goods and services. PPIs measure price change from the perspective of the seller. The Consumer Price Index, CPI, is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. Indexes are available for the U.S. and various geographic areas. Now with interest rates. Typically when interest rates are raised, Many investors sell or trade their higher-risk stocks for government-backed securities such as bonds to take advantage of the higher interest rates they yield and to ensure that their investments are protected. These are just a few examples of economic data that have a high impact on the market. These are events that we teach not to be in the markets 10 minutes prior to this news being released, or 10 minutes after this news being released. These are just a few examples, but not all, of the events that have the potential to cause major market moves. Which is why it is imperative to have an economic calendar, and look at it, every day. The events listed above not only have the ability to move the markets in upwards of 500 to 600 points in less than a minute, but they have done it, time and time again. You can literally lose your entire account, in a single minute, being in the markets when this news is released. One of the best economic calendars that we have found is called My FX Book. It is designed for the Forex market, but we like the overall look, feel, and the ability to get alerts. Now, there are many other economic calendars out there. We just chose this one. You can check around for one that fits your needs, but it is a must-have, and you simply cannot start a trading day without looking at it. And finally, we'll end with major world events such as going to war, events that unfold in real time, that we have no control over as traders, so you want to have a grasp on the overall economy, going into the trading world, and you'll want to monitor the outside world, throughout your trading career, as news outside of our control can have a tremendous impact on our trading day.
Bang Bang Trading's boot camp. I'd like to welcome everybody. Hope you're having a good time so far. Going forward, day 5 and beyond are going to be the beginning of the educational process, okay? But day 4 is perhaps one of the most important lessons you'll have yet, okay? If not throughout the entire boot camp, because without an economic calendar, you are putting yourself at risk to news that's already been planned, and you can avoid putting yourself in the potential risk spot. So we chose My FX Book. It's based for the Forex market. I was researching the Forex market and came across this calendar, and I absolutely loved it because you're able to put on notifications, which we'll cover in a minute. But I want to give you an example of why you need an economic calendar, okay? It's going to list all the news that's on deck for that day, okay? Existing home sales. Notice this is Wednesday, September 21st. I want to give you a bird's eye view of the potential moves that the market can make surrounding economic news. Okay, we had the Fed interest rate and the FOMC economic projections. Now, Wednesday, September 22nd. This came out at 2 o'clock in the afternoon. Let's jump into our charts and look at Wednesday at 2 o'clock in the afternoon. Here we are, 9:21. 2 o'clock is right in this area. Look at the major swings the market made on that day. We went from roughly 12,100 down to 11,700. That's a 500-point move. Okay? If you did not know that this news was coming out on this day, and let's say you were looking left, you did your homework, right? You were getting ready to trade a range breakout, and you went really large in your position on this candle, all right? Now, granted, this is a 15-minute time frame, right? Just look at the potential losses you could have taken or gotten yourself into. Not even that. Look at this loss you would have incurred, all right? That's one day. Now let's go back and look at another example of why having an economic calendar is so important. Okay, prior to this, we had news on the 13th, I believe. I'm making this video 2 weeks prior or after the fact, but I believe it was the 13th. Yes, we had the inflation year over year, all right? This news came out at 8:30 a.m., All right, let's go back here to the 13th. Okay, here we are on the 13th. Same scenario. All right, we're on a 15-minute time frame, but if you go down to the smaller time frames, this is going to be a really nice chart pattern, right? You're looking at it, you know, you're bouncing off of the lows. You got a nice wedge pattern forming. Typically, these high ascending patterns will lead to a downward move. All right, but traders are most likely trading these breakouts. Okay, without that news, without knowing what was happening that day or on deck today, look what you could have potentially walked yourself into. Let's go ahead and mark this off. All right, this thing ripped up to 12,950, and this, I remember this day, happened almost in one bar. Okay, 400 points again, 450 points. That's enough, guys, to wipe out your entire trading account, depending on your position size, okay, and whether you had a stop loss or not. Now, a major move like this, you always run the potential of your stop loss not working, right? Because it happens so fast, faster than the systems are able to produce your order, okay, without slippage. All right, so that is the importance of the economic calendar, okay? Having this checked off. Let's go for tomorrow, okay? Now, tomorrow on the economic calendar, tomorrow is October 24th. On tomorrow, we have at 9:45 S&P Global Services PMI and Manufacturing PMI. All right, look at, I already have my notifications turned on. In my FX book, what will happen now, I could just go in, I could get any notification I want. All right, let's go back. All I got to do is click the notification icon. You can see in the bottom right corner of my screen. Now, when that news comes up, it's going to pop up here and tell me whether it was better than expected or worse than expected. Okay? But what I'm teaching you guys to do is you are not allowed to even trade 10 minutes prior or 10 minutes after this time period. So at 9:35 you are out of the markets, and you're not allowed back in until 9:55. Okay? Once you become comfortable trading and you're profitable and you're making money, you could adjust those numbers accordingly. Okay? I know a lot of prop firms, proprietary firms, don't let their traders trade 2 minutes prior to 2 minutes after. All right? But the problem with that is the market can make major moves 5 minutes before, right? I mean, you can have one 2-minute bar rip 150 to 200 points before that news. Okay? So protect yourself. All right? When you have major news up on deck, stay out of the markets until you know what you're doing, okay? Learn everything we're teaching you, implement it, and treat it like it's your career. Because if you're coming to trading for money, it's not going to work for you, okay? Learning to trade correctly in the beginning will keep you safe in the long run, okay? In the future. But if you start jumping into trades and gambling, it's going to be really hard for you to rid yourself of those habits in the future. And then you'll lose so much money doing that. When you do learn to become profitable, you're going to question yourself on your entries. Okay? And what I mean by that is, let's say you're finally learning to become profitable and you're scared to enter where you know you should, and then you get, you see the market going up, and then finally you'll enter here and the market will pull back on you. All right? So if you're a new trader, a beginning trader, somebody who's not too far along in your trading career and you don't have any bad habits yet, listen to what we are teaching you and do not deviate it from it one iota. Once you have the foundation that we're teaching you, you can build upon that for the rest of your trading career. All right? The trading world is a journey like no other. Okay? As you grow in your knowledge, your strategies are going to change. Okay? You're going to add this, you're going to take away that. You might like this, you might not like that. Okay? Your position size will also change. Okay? But in the beginning, keep it simple and keep it small. You are only allowed to trade one contract, okay, with your $500 account of the MNQ. One contract, that's it. And there's a reason for that, which you'll learn going forward. All right? So the economic calendar, guys, you know, there are plenty of them out there. We just happened to come across this one and I really liked it. All right? You know, you could get a glance of the whole week, you know, at a bird's eye view. You could look through, you can mark off all your, you know, your high impact items. You know, you can mark off your medium impact items. Whatever you'd like. I tend to focus more on the higher, the red impact items. I'll get little notifications, right? But typically this news, you know, comes out anywhere from 8 o'clock to 9, 9:30, 10:30. You know, Fred Powell likes to speak later in the afternoons, and his speeches can typically last for an hour or two. So for the entire length of his speech, depending on what comes out of his mouth, can move the market for the next hour or two, right? 1 minute he might say something really good and the market rip up, and then he'll say something really bad and the market rip down. So on days like that and days leading up to Jerome Powell speaking, the market tends to just kind of range bound and go sideways while everybody is waiting for the news. All right? So an economic calendar, you are not allowed to start your trading day without looking at it. Again, you are not allowed to start your trading day without looking at it. When you come up, or when you wake up in the morning, you come to your computer, this right here is the very first thing you're going to open up before you even look at your platform. Okay? Does everybody understand that? Make sure you're looking at the daily, your day. Come in here, come into economic calendar, all right? You can sign in, you can set up an account, and you can even integrate your trading platform with this, and you can get all your statistics right here. However, Tradevate does that all on its own. But if you have a platform that doesn't, you can add your platform to the MyFX book, and you can get all of your data on MyFX book, meaning your gross P&L, your wins, your losses, things like that. All right, but that's something you'll have to check out on your own. With Tradevate, we don't need that. We already have it at our fingertips. Okay, so number one, economic data. Economic calendar, you need one, find one, install it, and have it ready to go. Okay, think of the economic calendar as your trading brokerage, okay? Because without this, you don't have the other. All right? You have to know. You have to know beyond a shadow of a doubt what news is coming out, because that's news you can control. Okay? You can adjust your position sizes based on the news that's coming up for the entire week. Okay? When you have FOMC minutes or CPI data, things like that, inflation, all right, typically that week you're going to want to go to a smaller position size. All right? If you're somebody who's used to trading 10 contracts, you're going to want to limit it maybe down to 3. Okay? You don't want to go in big size around these news events. All right? The next thing we're going to talk about is quad witching. All right? Quad witching takes place on the third Friday of March, June, September, and December, like you just saw in the video. All right? That's when the options expire all at once. All right? That's going to be another time where you want to keep your position size small. Okay? third Friday of every month. All right, the market can whipsaw up and down in either direction. You don't want to get caught. A lot of times there's a lot of market manipulation that takes place in the overall market itself, but on those specific days, okay, remember, we don't want to think like the average retail trader. We want to think like market makers. We want to think like smart money. There's a reason why so many retail traders don't make it in this game, okay? Why do you think so many few people are able to make it to become a Navy SEAL, right? Because it takes dedication, it takes time, it takes willpower, it takes strength, and it takes the ability to listen and do what you're told. Okay? I may sound harsh at times, but there's a reason for that, okay? If you are a person that cannot control yourself or cannot control your emotions or doesn't know how to be disciplined or follow instructions, I can personally tell you now, trading is going to be very difficult for you. And you're most likely not going to make it. All right? If you have bad habits in your life, start to clean them up. Little by little. Better yourself, okay? Acknowledge that you have bad habits, okay? Because if you don't even acknowledge it and you don't even see it, how are you ever going to fix it? All right? So, March, June, September, December, third Friday. All right? The next thing I want to discuss is earnings. Earnings typically kick off January, April, July, and October. All right? And earnings in and of themselves can move the markets exponentially as well. All right, if all these companies start coming out and reporting better than expected earnings, the markets are going to react to that and go higher. If they all come out and report worse than expected earnings, the market's going to obviously trade lower. All right, so these are the three major things that you want to have on your radar. You want to know. All right, this information we can control, right? We can control economic data, economic news, right? Because we know when it's coming and we know what time it's coming. Okay, we know what day it's coming, we know what time it's coming. All right? What we cannot control is major breaking news that is beyond our control, and that can happen at any moment on any day. Okay? I'm a firm believer of trade what you see, not what you think, or trade what you see, trade the reaction to the news, don't trade the actual news. Now, what do I mean by that? I mean, if you're waking up every day and you're turning on MSNBC, CNN, you're reading the Wall Street Journal, or whatever it is, okay? And they'll tell you, hey, the market's looking good today, we're set to rally. And then the market will open up and do this all day, right? It'll bounce down, and then it'll come up, and then it'll come down, and then it'll come up, and then it'll come down. And if you're one of those people who listens and believes the news, well, then you're going to be buying this dip, you're going to buy this dip, you're going to buy this dip. You see where I'm going with this? All right? So we don't care what the news is. We care how the market reacts to the news, so we don't get caught on the wrong side of the news. Okay? I can't tell you guys. I've been doing this a really long time. All right? Don't ever get a biased opinion in your head because of some group. Well, maybe you're on a Facebook group and they're a bunch of bulls in that group, right? And every day to them, the stock's going to the moon, right? So you join their group in the morning, you're all excited, you're like, yes, we're gonna break all-time highs today, we're gonna make a ton of money, right? And then what happens? The market just drops, and again, here you are buying every dip, right? Adding to your losing position because the market just keeps going down, but because you had a biased opinion in your head, you keep buying the dip, and it keeps dipping down, all right? So get all the biased opinions out of your head and trade what you actually see on the charts, okay? A lot of times, if the news comes out bad, okay, we talk about location a lot, all right? Location, location, location. Okay, and remember, this all comes back with experience, guys. But what you'll see sometimes, okay, let's just say this was different, and this day this news came out, and we had good economic news, all right? So let's say that this came out, right? I want you to notice something here. Notice this one bar took out almost 5 days of trading to the left of it. Three or 4 days of trading. Okay? So let's say anyway, this news came out and it was super good. Alright? And then the market just sold off. Okay? Why would the market do that? Well, because remember, this isn't a game of thinking like a retail trader. It's thinking like the markets. Alright? And where is smart money going to make the most money? Where are market makers going to make the most money? Okay? If they just ripped it up on good news, what's going to happen? The expected, all the retail traders who don't understand the markets are buying this to go long because the news is good. Right? Sometimes it will go like that, but other times they'll sell it off. And all the retail traders are losing their minds. They can't understand. Why is this going down? The market, the news was so good. Well, that's because the market was already up in a key position. All right? So smart money doesn't want to add to that up here on that good news. They want to add down here. Okay? They don't want to be buying it at this price. Right? We got good news. The market should rally from here on out. Okay? But they don't want to buy it here. They want to be buyers here. They want to be buyers here, right? They don't want to buy this at the top. There's not much money to be made there. So always keep that in the back of your mind, okay? Wait for the reaction to the news. Don't trade what you think, okay? Don't believe what you hear, okay? We don't listen to the news. We don't trade the news. We trade the reaction to the news, okay? Now, it just so happens that this new news came out bad, right? Is this not a perfect area for them to sell that? Absolutely. So, in conjunction with when does the news come out and what time, look at where you are prior to the news, right? If the news is really good, do you have the potential to make a higher move from where you're currently at? Or would it be beneficial to be waiting for it to pull back to buy lower? Okay? And vice versa, all right? If you're anticipating this news to be bad, are you currently in a position high enough where you could see a massive drop like that? Don't worry about taking this all in right now because you're going to learn it as we go. Okay? So you always want to know in the back of your mind, where are you? Always look left prior to your news. Okay? Are we in an area where if the news is bad, could we sell off hard? Absolutely we are. Look how high up we are. Right? Now if we were down here and the bad news came out, we might not see that big move like we did here. Okay? We might not get that big move because we're already down so much. Right? They don't want to sell it at that low price. So if the news was really bad down here, they might rip it up, right? Because every retail trader then is going to be thinking to sell, but they don't want to sell it down here, right? They want to get better prices. So it can be very confusing at times, guys, all right? And extremely difficult to master and learn and understand, but that's why we're here. We're here to help you on that journey. Rewind this video where I come live and watch it over and over and over again. Okay? Until you get it. Until you understand it. Now, we talk about this live in our group every day. But the more knowledge you have that's right at your fingertips, already in your brain, the better off you're going to be in this game. Okay? Alright, guys. So, that's going to wrap up day 4. Day 5 tomorrow. We're going to start showing you how to set up your charts, how to prepare for the day, how to get a pre-market game plan. Hope you're excited, guys. Can't wait to see you tomorrow, day 5.